Hello everyone, I am Brenda, and now we are going to continue to the second part of our tutorial video, which covers the materials in the first week and the second week. So there are 4 problems that we will solve today, and we will start with the first problem, which is classification of cost in merchandising sector. So, Essential College Supplies is a store in Universitas Indonesia. The store has an apparel section, which sells t-shirt with the school logo, and convenience section. It reports revenue from the two sections separately. Classify the following costs as follows. A. Direct or indirect costs of the total number of t-shirts sold, and B. Variable or fixed costs of the total cost of the apparel section change as the total number of t-shirts sold changes. So there are 8 costs that we are going to classify, but first we have to know what is the cost object and what is the cost variability. And for the cost object, it is mentioned in the case that the cost object is t-shirts sold in the apparel section of the store. And the cost variability is with respect to the changes in number of t-shirts sold. Okay, and so for the first cost, annual fee for licensing the school logo. First, we classify it as direct or indirect. We can say that it is direct. Why? Because in the case, it is said that the apparel section sells the t-shirt with the school logo, and it doesn't mention that the school logo is also used for the convenience section. So we can say that the school logo licensing cost is only for the apparel section of the store. Thus, we can say that it is direct cost in regards to the number of t-shirts sold. And it is also fixed cost because we don't necessarily pay higher annual fee when we increase the number of t-shirts sold. So it is direct and also fixed cost. And the second is cost of the store's manager salary. It is indirect cost. Why? Because the store's manager, in this case, it oversees both of the section of the store, which is apparel and also convenience section. So we can say that is indirectly related to the t-shirts sold in the apparel section. And it is also fixed because it doesn't increase when we increase the number of t-shirts sold. And the third one is cost of t-shirt purchase for sale to customer, which is direct because it is only for the t-shirt, so it is directly related, and it is variable. When we want to increase our sales of t-shirt, of course we have to buy more raw materials. In this case is the t-shirt itself. And then the fourth one is subscription to College Apparel Trends magazine. This is also a direct cost. Why? Because as we can see, it is a College Apparel Trends, which we can attribute to the apparel section of the store. And then the apparel section itself mentioned in the case it only sells t-shirt. So we can say that this cost is direct cost for the t-shirt sold in the store. But it is a fixed cost because we don't increase the cost when we increase the number of t-shirts sold. And then the fifth one is leasing of customer software used for financial budgeting at the store. And because this is a store-wide store, this is classified as indirect cost and fixed. And then the sixth one, cost of coffee provided free to all customers. Again, because it is a store-wide store, which covers both of the section, apparel and convenience section. It is indirect cost for the t-shirt, and it is also variable. When we increase the number of t-shirts sold, we also have to occur more cost for the coffee provided free to all the customers. And the seventh cost is cost of cleaning store every night after closing, also indirect and fixed. And the last one is freight in cost of t-shirt purchased by ECS, which is direct because it's for the t-shirt only and it is variable. And on to the next problem, the second one, is about classification of costs in manufacturing sector. So, Depok Furniture Company assembles 2 types of chairs, recliners and rockers, and separate assembly lines are used for each type of chair. Classify the following costs as follows: direct or indirect costs for the total number of recliners assembled, and B, variable or fixed cost of how the total cost changes as the total number of recliners assembled changes. And there are 9 costs here that we're going to classify. It is actually similar to the first problem, but the sector of the company is different. This one is for manufacturing, and the previous one was about merchandising sector. So we first again start with the cost object, which is the number of recliners assembled, and the cost variability is with respect to the changes of number of recliners assembled. The first cost of fabric used on recliners, is a direct cost and also variable, because when we want to increase the scale of production of the recliners, of course we have to buy more raw materials, which one of it is the fabric used to make the recliners. And for the second one, salary for public relations managers for Depok Furniture, because this is a plant-wide cost, we classify it as indirect cost and fixed. Annual convention furniture manufacturers, generally Depok Furniture attends. It's also indirect because it's a plant-wide cost and it's fixed. Cost of lubricants used on the recliner's assembly line. This one is direct because it is especially only for the recliner assembly line, but it is fixed. It means that when we increase the number of recliners, for example, by 2 units or 3 units, we don't necessarily have to increase the cost of lubricants. And then for the next one, freight cost of recliner frames shipped from Medan to Depok, it is direct because it's only for the recliner and it is variable. The more recliners that we assemble, the more frames that we have to ship from Medan to Depok. And the sixth one, electricity cost for recliner assembly line, single bill covers entire plant because it is a plant-wide cost, it is an indirect cost, and it is variable. When we increase the number of recliner, we have to incur or pay more electricity cost. And the seventh one, wages paid to temporary assembly line workers hired in periods of high recliner production. Of course, it is a direct cost only for the recliner and variable. Because when we want to increase the production, we have to hire more additional assembly line workers. And the eighth one, annual fire insurance policy for the whole plant, it's indirect because it can be used for both recliners and rockers and also fixed. And the last one, wages paid to plant manager who oversees assembly lines for both chair. So it's also indirect because for both chair and it is fixed. Next, moving on to the next problem, the third problem is regarding inventoriable cost versus period cost. Each of the following cost items pertains to one of these companies. Ace Hardware, a merchandising company, Samsung, a manufacturing company, and Rent a Nanny, a service company. And there are 8 cost lists here, and we are asked to do several things. The first one is to distinguish between the manufacturing, merchandising, and service sector company. The second one is to distinguish between inventoriable cost and inventoriable cost and period cost. And the last one is to classify the cost above as inventoriable or as period cost. So for the first problem, what are the differences between manufacturing, merchandising, and service companies? So manufacturing companies are companies that purchase materials and then convert them into various finished goods. For example, is the automotive companies and the textile companies. And the second one, merchandising companies, are companies that purchase and then sell or resell tangible products without changing their basic form. For example, a retailing or distribution company. And the last one is service company, which provide services or intangible products to their customers. For example, legal advice or audit firm. And for the second problems is the difference between inventoriable cost and period cost. So inventoriable costs defined as costs of a product that are considered as assets in the balance sheet when they are incurred, and that become cost of goods sold when the product is sold. And if you want to know more or more explanation about the inventoriable cost and period cost, please check the first part of the videos. Um, and there are also examples of these costs in the video explanation. And the second one, period costs, are all costs in the income statement other than cost of goods sold. These costs are treated as expenses of the accounting period in which they are incurred because they are expected not to benefit for future periods. So everything outside the inventoriable cost or everything that we cannot account as cost of goods manufactured are accounted in the period cost and directly expense in the period in which they incur. And then the last one, we are asked to classify the 8 costs here, whether they are inventoriable costs or period costs. So for the first one, cost of plumber and plumbing supplies available for sale at Ace Hardware, it is an inventoriable cost because we account this cost as assets in our balance sheet before we sell the plumber and plumbing supplies to the customers. And the second one, electricity used to provide lighting for assembly line workers at Samsung manufacturing plant. This is also an inventoriable cost. Even though it is an indirect one, we still account this to the cost of goods manufactured, and and also it is recorded as assets before we sell them to the customers. And the third one, mileage paid to nannies traveling to clients for rent a nanny. This is a period cost because service companies does not have inventoriable costs. All of their costs are period costs and expense when they are incurred. And for the fourth one, wages for personnel responsible for quality testing of Samsung products during assembly process. This one is also an inventoriable cost. And the fifth one, salaries for rent and nanny marketing personnel, period cost because it is a service company. And sixth one, lunches provided for nannies, rent a nanny. For nannies for rent a nanny, it is period cost. Salaries for employees at Samsung retail stores, it is also a period cost because uh, it means that these costs, salaries of employees at Samsung retail stores, it already the cost incurred after the manufacturing process. It means that we're already on the process of selling the products to the customers. So we don't account this one as inventoriable cost in our balance sheet. And the last one is shipping costs for Samsung to transport product to retail stores. This one is also a period cost because this is to distribute the finished goods to the customer. And in this Excel sheet, I also provide the illustration of how we account the cost in the balance sheet, income statement, and also period costs. Moving on to the last problem, um, is about income statement and statement of COGM or cost of goods manufactured. So, Urban Corporation has the following account balances for specific dates and for the year 2020. And we are asked to prepare an income statement and a supporting schedule of cost of goods manufactured for the year ended December 31, 2020. So there are two statements that we have to make, income statement and schedule of cost of goods manufactured, and we will start at the income statement first. So for income statement, uh, there are three main components, which are the revenues, the cost of goods sold, operating cost, or as known as the period cost, and the bottom line is operating income. Let us start from the revenue first. From the case, it is stated the revenues for the year 2020 is 950. And to moving on to the cost of goods sold, beginning finished goods, we have 70 million dollars. And for the cost of goods manufactured, we don't have this number yet because we will get that from the second schedule. So we don't have the number also for the cost of goods available for sale and the COGS as well. So we first move on to the operating cost part, which is stated in the case $240 million. So to complete this statement, we have to make another schedule, the second one, which consists of three parts, which are the direct materials, direct manufacturing labor, manufacturing overhead, and then the final one is the bottom line, which is cost of goods manufactured. So start from the first components, direct materials. In the beginning of the year, we have inventory, which is valued at $15 million. And in the course of the year 2020, how much direct materials that we buy, it is also stated in the case. We purchased 325. So the cost of direct materials available for use in the year of 2020 is what we have in the beginning of the year, plus what we purchased in the course of the year. So it's 340. And at the end of the year, we still have ending inventory, which is 70 million dollars. Sorry, it's supposed to be 20 million dollars. So direct materials inventory at the end of the year, 20. And then the cost of direct materials available for use in 2020. And we subtract the ending inventory at the end of the year. We got direct materials used in 2020 is $320 million. And the second component is direct manufacturing labor. It is also already stated in the case, $100 million. And we have to calculate the third one, which is manufacturing overhead costs, which are all the costs outside the direct materials and direct manufacturing labor. So other than all these costs, we input them in the manufacturing overhead sections. The first one is depreciation, 80. And then plant supervisory salaries, 5. Miscellaneous costs, 35. Supplies, 10. Plant utilities, 30. Indirect manufacturing labor, 60. And we sum up all the numbers and we got 220 for the manufacturing overhead. So we got the manufacturing costs incurred in 2020 by adding the direct materials cost plus direct manufacturing labor costs plus total manufacturing overhead costs. So always remember that manufacturing costs, there are three components: the direct materials, the direct manufacturing labors, and the overhead costs. So we got 640, but the bottom line that we're looking for is the cost of goods manufactured. So we still have several process to go, which we input the beginning work in process inventory. We get from the case here $10, $10 million. So total manufacturing cost to account for in the year is 650, and at the end of the year we still have work in process inventory, which is $5 million. So the cost of goods manufactured in 2020 is the total manufacturing cost to account for, which is 650 minus the ending work in process inventory that we still have at the end of the year. So it's 645. After completing this second schedule, we can go back to our first schedule and input the COGM, 645. So we have the cost of goods available for sale by adding the beginning finished goods inventory that we have in the beginning of the year, plus the cost of goods manufactured in the course of 2020, and we subtract the ending finished goods inventory, 55. So cost of goods available for sale minus ending finished goods inventory, the cost of goods sold expense for the year 2020 is 660. So we can get the gross margin, revenues minus cost of goods sold, 290. And then to get the operating income, we have to subtract the operating cost. So gross margin minus operating cost, we got the operating income of 50. So we can conclude that from the income statement, we got the bottom line of operating income in 2020, $50 million. And from the second schedule, we get that the cost of goods manufactured in 2020 is $645 million. So that is all today for the tutorial for cost accounting in week 1 and week 2. Thank you so much for your attention, and I will see you next time.